How is everybody doing? Welcome back to another episode of the Banker Next Door. I am continuing my Christmas theme this week as we roll through the week here, and just a couple episodes left. We'll be all done with this, moving on with the holidays. But hope everybody's enjoying the little green-red motif with the Christmas lights and everything. But anyway, today's episode, I thought that we would do PCBB. Put out 3 blogs over the last couple weeks, basically doing a kind of 2024 year in review. And I figured we could take a look at those real quick. I think this would be a great way to kind of look back at the year that was and see what was going on here. So let's take a look at the first one here. So this is 2024 year in review part 1. And this was titled Market Challenges. So over the past year, the financial sector has witnessed many disruptive forces. In a 3-part series, we review the challenges CFIs have faced and how they have responded. So the first thing was economic uncertainty, inflation, and higher interest rates. So in September, inflation hit a 3-year low of 2.4%. However, the effects of prolonged high inflation are still being felt as prices are 21.4% higher than at the start of the pandemic. In November, consumer sentiment, which dipped halfway through 2024, rebounded to 71.8%, reflecting some optimism about the economy going forward. Indeed, despite continued geopolitical shocks, real GDP is expected to expand by 2.6% in 2024, an upward revision from 2.4%, although the Federal Reserve cut interest rates by 75 basis points, now 100, between October and November. Rates have remained high. So what are some of bank strategies? Well, building stronger relationships with small to medium-sized businesses, investing in digital transformation. Many CFIs have turned to technology to drive efficiency, streamline processes, and engage in attract customers in cost-effective ways. The second thing was increased cost of funds and intensified competition for deposits. Despite the Fed's rate cuts, CFIs banks are still battling with the rise in cost of funds. According to the Conference of Bank State Supervisors, the CSBS 2024 Community Bank Survey, nearly 9 out of 10 respondents rated cost of funds as either extremely important or very important, topping the list of external risks to their business. With rates peaking in 2024, customers have been increasingly shopping around for better deals, and banks have faced fierce competition, not only from their peers, but also from the higher yielding options in the Treasury and money markets. So what are some bank strategies here? They employed tailoring pricing strategies. So since depositor sensitivity to interest rates varies, price sensitivity analysis has allowed banks to strike a better balance between customer retention and net interest margins. Making use of rewards and incentives, and leveraging brokered and reciprocal deposits. And then number 3 was liquidity pressures. Alongside higher funding costs, CFIs have faced pressure on liquidity while regulators are encouraging them to hold more cash and maintain multiple avenues to access funding. What does that mean? Well, that means like lines of credits with the Federal Home Loan Bank, the Federal Reserve discount window. In the CSBS's survey, liquidity was rated as either extremely important or a very important internal risk by 78% of respondents. Although lower than the 84% recorded in 2023, the figure is still more than double that as of 2022. So again, what are some of the bank's potential strategies here? So increased monitoring of commercial real estate portfolios, using federal programs, focusing more on risk management. So all good things. So U.S. financial institutions have faced a complex landscape in 2024, driven by economic uncertainty and the effects of persistent inflation and high interest rates, leading to continued competition for deposits, high cost of funds, and liquidity pressure. CFIs have responded by adopting a number of strategies, including supporting small to medium-sized businesses through these challenging times, embracing digital to drive efficiencies and boost customer engagement, employing diverse deposit strategies, and increasing their focus on risk management. Keep an eye out for our second installment coming up, which we are going to pop into right here. So this is part 2, regulation and digital banking. In this second part of our review of 2024, we look at the challenges and opportunities arising from increased regulatory scrutiny, the rise of open banking, and the adoption of faster payments. So number 1, increased regulatory scrutiny. So financial institutions have had to contend with increased regulatory scrutiny across the many areas of their business, from third-party relationships, fair lending, and M&A to open banking. cybersecurity, capital planning, and liquidity management, among others. What's more, CFIs have additional requirements to deal with, such as updates to the Community Reinvestment Act, CRA, implementation of small business lending data, collection rule, and adherence to the new FDIC signature. Some of the strategies they've employed on this, they are employing enhanced risk management practices. CFIs have taken proactive steps to manage the demands of heightened regulatory scrutiny. This involves assessing potential risks, developing and implementing risk frameworks and controls, and supporting ongoing monitoring and review to ensure compliance. Investing in technology. Many institutions have turned to technology to meet increasingly complicated regulatory requirements. Advocating for change. Groups such as the Independent Community Bankers Association, ICBA, who I quote frequently, and the American Bankers Association, the ABA, Community Bankers Council, have been lobbying for regulations to be tailored to the size and complexity of each institution, in addition to an overall reduction in the compliance burden. Two, the rise of open banking. Open banking has been a revolutionary force in banking, with its promise to enhance customer engagement, drive innovation, and fuel sustainable growth. Consumers will be able to access personalized services, compare offerings from different providers, and make more informed financial decisions. The global market for open banking was valued by Mordor Intelligence at $20 billion in 2024, and it is expected to grow at a CAGR of 15% in the next 5 years. The U.S. accounts for nearly 1/3 of that growth. I hate open banking. I make no bones about that. If you guys have listened to some of my live streams, I have gone off about open banking. I think open banking is the dumbest thing that could happen to banks, and I hope this thing gets. I know the lawsuits are flying. I hope there's a ton of them, and I hope this thing gets shot down. But that being said, what are some of the strategies involved here? Exploring with caution, focusing on regulatory compliance, developing strategic partners. But if anybody is curious about open banking, I've done an episode on open banking. I've talked about it in multiple times in some of the live streams that I've done in the strategy room. So, go check those out if you want to get some more information on that. It's a fascinating topic. I think there's a lot of dangers to banks in open banking. I think that the CFPB recklessly put this thing out there and shoved it through because they knew that the new administration would shoot it down. But like I said, don't want to get off on too much of a tangent there. So, third thing, faster payments. The demand for faster payments took a leap forward in the last year. A survey by the Fed found 86% of businesses and 74% of consumers used some form of faster payment in 2023. Digital wallets experienced particularly strong growth, with a more than 30% increase. According to Bank Directors Technology Survey, FIs, banks, are on board, as an overwhelming majority of them recognize the importance of offering real-time payment capabilities to all client segments. Just over 1/3 of survey respondents currently offer these services to small business customers. So what are some of the bank strategies here? Taking a gradual approach. Most banks are taking a step-by-step approach, starting by developing the ability to receive faster payments, as this requires less processing and compliance capabilities. Many are still cautious about sending, as they are concerned about fraud and end-user interfaces. The Faster Payments Council recent survey found that 70 to 80% of banks are likely to receive instant payments by 2028, while only 30 to 40% will be able to send them by the same year. The other strategy here is adopting the FedNow service and the RTP. Most CFIs are turning to key platforms designed to facilitate faster payments, such as the FedNow service and the Clearinghouse RTP networks. So we'll see there with that. I think FedNow service is good. It's off to a good start, but there's still a ways to go. In 2024, increased regulatory scrutiny has provided additional hurdles for CFIs across several aspects of their businesses. They have responded by boosting their risk management practices and investing in technology. Other trends, such as the rise of open banking and the adoption of faster payments, have provided some opportunities for growth, while also presenting several challenges, leading CFIs to take a cautious and gradual approach. There you have it. So now let's go to the final one. So part 3, technology and cybersecurity. In this third part of our review of 2024, we look at the challenges and opportunities arising from continued digital adoption, the uptake in AI, and the increased threat of cyber attacks. So Couple more key trends here. Number one, continued digital adoption. The number of digital banking users has soared in recent years, reaching over 60 million in 2024. According to a Payments Intelligence report, 60% of millennials, 57% of Gen Z, and 52% of Generation X primarily use mobile banking apps. To meet the increasingly sophisticated demands of digital savvy consumers, CFIs have continued to invest in digital transformation projects. According to Bank Director's annual technology survey, 61% of respondents stated that leveraging technology is a strategic priority for their boards. What are some of the strategies they used here? Embracing product innovation, transforming branches. Despite the increased use of digital, customers still crave human interaction, particularly when conducting more complex transactions. Many CFIs have integrated digital capabilities into their traditional branches and shifted their focus to providing expert advice rather than just simple transactions. Number two, AI and automation. With its ability to process vast amounts of data and generate insights, AI has the potential to revolutionize the financial industry. There is a general consensus that AI will deliver innumerable benefits. A recent study by Citi estimates that AI could boost the banking industry's profits by 9% by 2028. Adoption, however, is slow. Some of the most common use cases include fraud detection and prevention, customer service enhancing capabilities such as chatbots and virtual assistants, and analytics to provide tailored product recommendations, credit risk assessment, streamlining and automated back office operations, and regulatory compliance and reporting. Regulatory scrutiny and lack of resources are often regarded as the greatest barriers to adoption. Now, what are some of the bank strategies here? Explore the pros and cons, implementing gradually, and partnering with fintechs. And then finally, number three, persistent cybersecurity risk. With increased technology adoption, CFIs are more vulnerable than ever to an evolving array of cyber threats, from phishing attacks and malware to ransomware and data breaches. Nearly 96% of respondents in the Conference of State Bank Supervisors annual risk survey rated cybersecurity as either extremely important or a very important risk, the highest internal risk. So what are some of the strategies here? Adopting preventative measures, conducting third-party due diligence. So CFIs have faced many challenges and opportunities this year, including the rise of AI, continued cybersecurity threats, and the need to move down the path of digital transformation. In this climate, many banks are leveraging technology to better protect and serve their customers, striking a balance between digital capabilities and the personal touch for which they are known. So looking back at this, I thought there were some great things in here. The persistence of cybersecurity risk, AI and automation, continued digital adoption, faster payments, the rise of open banking, increased regulatory scrutiny, liquidity pressures, increased cost of funds and intensified competition for deposits, and then economic uncertainty, inflation, and higher interest rates. This did a great job of kind of summing up the year, really going back through all of these challenges, all of the things that happened in 2024, and that is a lot. That is a lot of stuff there. So again, I hope people found this kind of interesting. I think I've covered pretty much all of these topics in some fashion this year. Some of them a little bit more directly than others. But I've definitely touched on or scratched or talked about every single one of these topics throughout the year. So definitely, keep following the podcast here. Subscribe to the podcast. Check out a lot of these episodes because, like I said, this is the stuff. This is the meat and potatoes, guys. This is what I try to bring you week in and week out. I try to bring you the good stuff so that you know what's going on in the world of banking and the world of finance. And hopefully, you can use this good information to learn about what's going on and then apply this to your life and your business and the general market, to the banks that you work at, and hopefully learn some good stuff here along the way. So that being said, that kind of wraps up the PCBB 2024 year in review. If everybody, I'll wrap up with this. If you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Please leave all your comments down below. I'd love to hear if anybody's got any comments on the year that was in 2024. Remember, we are on YouTube, Rumble, and all major podcast platforms. And please be sure to check out some of the other content on the channel. I hope everybody's having a wonderful week of Christmas out there. Continue to enjoy the holiday week, and I'll be back with another episode again tomorrow. So thank you so much, everybody. See you later.